Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, July 8th, 2016, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have to report across the board. Incredible activity today following a jobs report. Tremendous volatility in the precious metals markets. Gold trading lower, dramatically lower right after the release of the report, only to close up about $5 on the day. We are looking at August gold, COMEX gold, 1367, putting it up $4.90 and closing just about $4 off the high of the day, which is 1371. But traders, take a look at the low of the day, 1336. So as you can see, we have had quite a considerable range on the day. We did pull profits on our current gold trade. Of course, we'll talk about that when we pull up our first gold chart on today's weekend review. So traders, what an incredible day when we take a look at the action that we have seen recently in gold. Of course, we did pull profits on our current long trade. If you recall, we had this tremendous spike. This came in, I believe, Thursday of last week or even Friday of last week, but we added a position at 1338. That would have been this candle right here. And we saw this market literally climb up to where we looked for our first potential softening in the market and looked for potential headwinds in the market, and that's roughly at 1371. 1371 is a one-to-one relationship on this subcount that we have between the rally from 1200, 1199 here up to this top at about 1320, and then we had this, of course, correction here, and then the secondary rally. We now have these two rallies equal in size. But as I talked about the other day, that is the minimum that you look for in terms of a third wave, an impulse wave. And the reason that is that the rule of thumb that we create our models from, simply put, is that wave 3 cannot be the shortest of any of the impulse waves. Now, that being said, and let me go ahead and compress this a little bit so you can see the different areas that we're looking at. But that being said, there are other areas that you will have a typical strong market move to. And let me go ahead and get this into perspective. There we go. And so what we're looking at is as follows. When we consider that this rally, as I said, went from roughly 1200 up here to about 1320, about $120 move. You've got that same size move. This is that one-to-one relationship at 1371. And so the fact that it hit that area a couple of days, this being the third day in a row we've had this as a high, it told me that we could see some weakness here. And if you recall from yesterday's show, what I was looking at in terms of my current model, let me go ahead and change the color so you'll see, but I was looking for this as a possible outcome. Our wave 1, we've identified. Our wave 2, this is our wave 3. Get a wave 4, some kind of a correction here, and then move to our wave 5. Wave 5 would either be a 123% extension at 1399, which is where I'm getting that number, or if it's an extreme move, then we're looking at 161% extension, and that, of course, would take us to 1445. Now, all of this, 1, 2, 3, 4, 5, this subcount here is this next wave. This is wave 2, and of course we had our wave 1. And so the interesting thing is, when we then look at an extension where we look at the range that the market moved from this wave 1, which comes in from around 1050 up to about 1280, our correction here, and then this wave 2, this puts us almost at a one-to-one relationship between this wave and this wave. So these numbers are matching, and most importantly, we did pull profits. The market closed above the point we got out at, no doubt about that. But we're well above 300% this year. We've done quite well, and with The jobs report, now, if you recall from yesterday's show, I had mentioned that I believe the report's going to come out really bullish, better than expected. We're going to see U.S. equities really take off, and the metals come under pressure. Well, I got most of it right. Most of it isn't good enough, but the interesting thing is we, in many other circumstances, would not have seen these metals move higher. Now, what moved the metals higher with all of that in regards? Well, one, the jobs report was better than expected, but it wasn't strong enough that there's any anticipation that the Fed's going to raise interest rates. One. Two, there's still incredible uncertainty within the European Union, the Brexit, and all of that has transpired. Currencies are still extremely volatile, and that's the reason we saw gold move along with the U.S. equities market. So next week, we will definitely take a look and see, because what's important at this juncture is whether or not this particular price area serves as either a small consolidation, which is what we're getting right now, or if we get some sort of corrective action before moving higher. I personally do not think this rally is over. My question is whether or not we'll see some sort of correction at this point before moving higher, or will we just blast straight through it? That we'll have to see on Monday, but we pulled profits nonetheless. Silver continues on that runaway tear, the incredible rally we have witnessed. Today, take a look at the range. On the low, 1923. On the high, 2027. A virtual $1 trading range, or $1 per ounce in silver, which is extreme on a single day, closing up almost 3% higher, over $20 at $20.19 on the day. So traders, where is silver headed? Well, I can tell you this, on a technical basis, when we look at different areas of support and resistance, the next real area of contention is really 2150, and it's based upon these tops. Of course, these tops came in, July and August of 2015, so roughly a year ago. We absolutely hit these bottoms at just below 14. So considering that the market was really at the beginning of this year at these low prices, 14, consider the kind of move we've seen. It's one of the more dramatic moves we have seen in the precious metals. Above that is this top right here, which comes in at $22 an ounce. So traders, following a robust jobs report, numbers released today, we had a tremendous upside surge rally in U.S. equities, with the Dow Jones Industrial Average closing up approximately 250 points, 18,146. That's a 1.4% gain. Look at the S&Ps. Now, the E-minis closed up about 29 points, 1.37% higher at 2120, 2121. That is our current print. But the Standard and Poor's 500, the regular contract, actually closed fractionally lower off the record historical high today. Traders, what a dramatic and exciting conclusion for the week, with an incredible turnaround today in the precious metals markets. Gold returning back to near its high on the day, and certainly we have seen the market gain tremendous value. Of course, we were able to profit from that. We got into our trade last Friday at 1338. We got out yesterday, and today, of course, our recommendation was to pull profits at 63 or to move our stops up tighter, as we talked about when we reviewed gold. In terms of next week, with this kind of solid move in gold, let's see how the market opens beginning of the week. And we're looking to reposition ourselves at this point on the long side, because as I said during the show itself, we do have more upside potential. I'm looking at, in terms of an upside target right now, roughly 1,400, 1,399 on this particular rally. We didn't get that softening that I did expect And we certainly are looking at some dynamic action in the market. Equities closing near record highs. That is also impressive. So we have an interesting mix in the markets in which, because of the turmoil in Europe right now, you've got a risk-on environment with money flooding into equities. But at the same time, you have safe haven plays, dollar being stronger all week, even though it was a little bit off on today's close, and the precious metals surging throughout. Very rare circumstance where we have these equities and precious metals moving in tandem, moving solidly to the upside. But that's absolutely what we do have. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week for another daily update and review. Bye-bye.